And who is on the hook for them in the end? It's the taxpayer. You know, Chrystia Freeland came out. She announced 20 billion more. We're going to buy 20 billion more. We're going to issue 20 billion more in mortgage-backed securities that are subprime, essentially filled with subprime mortgages. And we're heading into an economic crisis. I mean, that is just a disaster. You might as well just piss that money into the wind. It is gone. The economy is imploding and we are starting to see the early stages of a liquidity crisis form. You can see this evidenced in the long end of the treasury market that is selling off rapidly. You've also got the DXY, which is surging. You've got gold, which is correlated highly right now to the long end of the treasury market. You've obviously got the stock market that is selling off right now. And all of this is really a toxic combination for global economies, emerging markets especially, because as the dollar goes much higher, the amount of dollar denominated debt that they have becomes increasingly harder to service that debt. So the thing is, right now it's obvious to a lot of us that things are starting to break in the system. You've got mortgage rates that are essentially going parabolic in Canada and in the United States and in the UK. You know, it's happening all over. Global bond markets are really going through a tough time. I mean, I would have never thought that it was going to happen this way, and here we are with global bond yields absolutely surging right now. So what is going to happen moving forward is very difficult to predict in this sort of environment, but I wanted to get this video to you. I'm filming this video on a Wednesday, so I don't know how markets are going to close for the week. By the time you get this video, I'm going to be in Idaho. So the thing is, obviously what is happening right now in the global economy is not good. We've got growth that is slowing down massively across Western nations, especially in Canada, because the economy in Canada has become so dependent on housing and people investing into things relating to housing. So this has caused this kind of doom loop that has formed now, and we are starting to see that surge, and people really don't understand the consequences of this all happening right now. People really don't understand to the degree the economy is dependent on housing. And you know, we still see hysteria in some markets like Calgary, for example. There is still hysteria, there is still FOMO. People are still outbidding and paying way over what they should be paying for a home, and they are doing this because it's a market based off emotion right now, and a lot of investors coming in from other provinces. And I just find this all really interesting right now, the dynamic that we have going on. So you have everything which is pointing to a depression essentially, and the reason why I'm calling it a depression now that we're heading into is to prepare people for what they're going to see. You know, people don't have the money to sustain themselves. That is obvious to you and to me, but to most people, they don't really realize. They see all the polls and the surveys that we've covered on this channel, and they think, oh, that's not me, I'm doing okay, I'm all right, Jack, so everything's going to be fine. But that reality just couldn't be further from the truth, guys. There are so many things that are going to break as a result of this, and one thing that is breaking right now is the debt market. Corporations are going to be forced to lay thousands and thousands of people off, and we're already seeing that. You're not seeing that in the unemployment number yet, but we're seeing that with claims. Claims are skyrocketing, and claims haven't grown this fast since 2007, 2008. So what does that tell you? And Canada is in this precarious position because, like Australia and New Zealand, it just has an insane amount of debt. The debt to income ratio in Canada is absolutely insane, second highest in the world. That is just, it's hard to even say what that is, but it's just really bad when you're going into a credit crunch. That is the worst position that you want to be in when people are just up to their eyeballs in debt. And you know, the housing market hysteria that we still see in places like Calgary just goes to show what a mania we are really in, because it isn't driven by fundamentals, guys. That is obvious. You know, there's nothing fundamentally going good for the housing market in any areas of Canada. I mean, Alberta in particular, the economy is more dependent on manufacturing. Manufacturing is absolutely tanking right now. PMIs are really low. S&P S&P Global just put out a report of how we haven't seen people being this pessimistic since 2007, 2008. And then you've got all the other dynamics that are at play in the market. The thing is, for years now, people have treated the housing market in particular in Canada, I'm going to use that as an example, like a casino. The same way people in the United States have treated the stock market, which is like a casino. And what we're seeing right now is unique. We've never seen, you know, long end of the curve selling off this rapidly, and this scramble for collateral and liquidity that we're seeing, which is obvious with the DXY surging, and when you've got the long end of the curve selling off this rapidly. When things sell off like this, you're going to break things in doing that. You've got large financial institutions, some of the largest in the world, like BlackRock, who hold tons and tons of long-term US debt. So with that being said, with them holding so much of that long-term US debt, what does that do to their balance sheet if they market to market? What does that do to the balance sheet of the Canadian bank? You know, the Canadian banks are holding tons and tons of these mortgages, essentially, that are really just subprime. And who's on the hook for them in the end? It's the taxpayer. You know, Chrystia Freeland came out, she announced 20 billion more. We're going to buy 20 million more. We're going to issue 20 million more in mortgage-backed securities that are subprime, essentially filled with subprime mortgages. And we're heading into an economic crisis. I mean, that is just a disaster. You might as well just piss that money into the wind. It is gone. You're never going to see that money again. And you know, there's over $250 billion worth of these Canada mortgage bonds circulating right now, which are backed by you and me, the taxpayer. They're not backed by anybody else. They are treated like government bonds because they are backed by the Canadian taxpayer. So this insanity has been going on for too long, and we're starting to see that things are really breaking down right now. Like I said, what we've seen, the price action in the markets, especially the bond market, which is meant to be stable, is just absolutely insane. For pension funds, this is just an absolute disaster, similar to the disaster that we saw in the UK last year, which was literally a year ago this month when they were having that crisis. And then we've also had the banking crisis that happened in the US, which was another liquidity shortage event. And now it looks like we're getting to a liquidity crisis. You are beginning to see liquidity dry up, and it's going to mean everything is going to start come crashing down, because over the past couple of years, it's been nothing but a casino, guys, and people have treated the markets like a casino. They've treated the real estate market, the stock market, like a casino. And the thing is, people just have no risk management. The average person has no risk tolerance, no risk management. When I get into a trade, I look at, where am I getting out of that trade? Where am I getting out? Where is my stop loss? How much risk am I taking here versus the reward that I'm going to get? Is it worth it? Where am I going to be wrong? Those are the questions that I ask myself. The average person just asks, how much am I going to make on this? So it just goes to show what you're going to see. Holy shit. So there's a road here, but I don't want to scare these deers. These deers have just popped out of nowhere, but one just hopped up there. I just don't want it to get scared by me into the road, so I'm gonna back off down here. But anyway, guys, that's my signal to probably end this video here. It's starting to rain as well. So anyway, I want to thank you so much for watching this video, so much for supporting the channel. If you're looking for a VPN, which you desperately need to get away from this Bill C11 crap that we're seeing, go to expressvpn.com/Market Mania. If you want to help support this channel, then go to patreon.com/Market Mania. Thank you so much for watching. If you've enjoyed this, you might like this video here. You might like this video here that I've picked out for you. I will see you in the next one, guys. Take care of yourselves. Peace. Bye-bye.